Hello everyone, welcome back to Fundrise Finance. In today's video, I want to discuss my start of options journey. Yes, options are a way to generate more income in your portfolio as long as they are done diligently. Everyone has this misconception around options that it makes one lose a lot of money. It's a sort of a gambling. Even I was of the same thought till recently. But what I would like to say is that lacking proper knowledge in how to trade options is what makes everyone feels that it's more like a gambling. So with that said, I did spend a lot of time in the recent past over making myself familiar with what options are, how to deal with them. And after being comfortable theoretically and doing some paper trades, once I felt comfortable is when I decided to start my options journey with a small portfolio. So this is a simple bare bones calculation sheet, or to say tracking sheet, that I made for myself to track all the trades that I've done. So to give an overlook, we have what stock I am writing the option for, what is the strategy I'm using, whether it's a covered call or a cash secured put, how many options I'm selling. So in the options world, each option relates to 100 shares of the underlying security. When did I open the contract? What is the expiry date for that? When did I close the contract? How many days was the contract active for? Now, this is the first section wherein it deals with how much amount I received. So the action. So when you're selling a call or selling a cash secured put, it's always sell to open as the initial action. What is the strike price that I'm writing the option at? How much did I receive? And the final contract amount, which is nothing but the premium received multiplied by how much quantity I am rating for. And the commissions and fees that your brokerage charges for. And final received, which is the contract amount minus the commission and fees. And now this is an important field for myself, the suggested sell. So usually if you let the options expire till its expiry date, you get the complete amount that you wrote the option for. But what I've decided is I would sell my options when I reach a 75% profit. So if I was to receive $100 as an option premium, I'd create a buy to close transaction once I hit the 75% profit. I'll go with this further into the video once I explain what my action is. Now this is the amount paid section. So here, typically when you are closing an order, it will be buy to close. That's when you're selling the options. The strike price, how much I'm paying for, final what is for that particular contract, again commission and fees, and what the final paid, is similar to like how we got received. This contract amount minus commission minus fees. What is the profit or loss I made? How much is the amount I'm committing for that particular transaction? And the return on capital for that particular transaction. And if I were to repeat that transaction for the whole year, what would I make? And finally, a comment section to capture any notes. So I started my option journey in late March, starting on Medical Properties Trust, on which I purchased 100 shares and started to write covered calls on. The first transaction was a bit of a bummer. I used Fidelity as my brokerage platform. As you can see, the first transaction was like a bare bone transaction, just expecting a dollar amount. That too, taking out the commission and fees, I was set to receive 92 cents. But there was some glitch where I couldn't close the transaction myself, and I had to call into Fidelity to get that done. And that buy to close order was a little messed up, and I ended up at a loss of a dollar. It's fine. That's out of my way. And then I started a cash secured put on Ford, for which I was paid $7. But I ended up closing this transaction by paying back a dollar. So overall profit was around $5.50. Then again, another covered call transaction on medical properties, this time for $13 premium, which I bought to close at 3 cents. So what I do is this particular suggested sell, what it does is it considers my profit target with 75%. So out of the premium I'm receiving, it calculates 75%, and at the remaining 25% is what I would sell it for. So 3 cents out of is what I would create a buy to close order. And finally, I would receive $9.28. And I started a cash secured put on SoFi. You would have observed a pattern. I started with a low cost stocks just to get my feet wet into the business. And I was able to make small little premium as an overall profit, which I'm happy with because it's just the beginning of my options journey. Then here we see again another cash secured put on Ford on April 11th. This was for $7, which I closed at 2 cents to get an overall benefit of $4.50. Then I started a slightly higher price stock. This is Bank of America, on which I had a cash secured put at $27.50 as a strike price, for which I received $43. And after making 75% of profit out of it, I sold it back at 11 cents to get an overall benefit of $31.28. So if you see this is a return capital of 1.14% on the capital committed. And if I repeat this every week for the rest of the year, I would make almost 104%, which I don't expect to, but it's just a good figure to look at. and then another cash secured put for 40 cents premium this time, selling it back at 10 cents, making a profit of $32.28. And then this particular transaction on Ford, it's a cash secured put at 10 cents premium. Now this one, I intentionally rolled it at a higher price. I received $10, but I paid $45 to roll it out. So overall loss of $35 in this particular transaction. But because I rolled it back, I received $21 as my rolled transaction. And for this particular one, I got 100 shares assigned to me. So immediately I started to write covered calls on Ford, receiving $12 as a payment. But for this transaction, I paid back $19 to buy this contract back. The reason being, Ford had its ex-dividend on April 25th, where it would have paid 15 cents per share. So I would have received $15 as money in dividends. So though I got a hit of almost $8 over here, I made a profit of $15 in dividends. So it's like a net profit of around $7. This is my active transaction on Ford, for which I got paid $40 and have an active buy to close order at 10 cents. And you can see again another card call on medical properties, receiving $19 over here, buying it back at $5, receiving almost $13.50 over here. Then Bank of America, another cash secured put for 23 bucks. But I had to roll this transaction, buying it back for 44 bucks with a loss of almost $22. But I made that money back by rolling it onto a further date just a week later on May 5th and getting $64 in return, overall netting me around $47. Likewise, I continued my cash secured put on SoFi and started a new cash secured put on Hecla Mining for 11 bucks. And if this transaction holds true, I'll be receiving almost 8 bucks in return. And again, another card call on medical properties for 12 bucks. And finally, I opened a small cash secured put on Sirius XM Holdings for 12 bucks in premium. Looking back at how much I made through options. So in the month of March, I made around $22.50 using a capital of around $2,400. That makes a return of almost 1%. The month of April, I made almost $194 using capital of almost $6,400, returning more than 3%. So overall income generated was almost $216. It's pretty good for a starting of the journey. I'm sure this journey would continue well into the year as I learn along through the options journey and I keep you all updated. So that's all I wanted to discuss in this video with you all. Until we meet in the next one, let's try as much as possible to be financially healthy and take those small steps towards financial freedom. See ya.